Want to know how you can turn a small investment into a $1 million portfolio? Stick around, because today we're diving into the essential steps you need to take to build a successful investment portfolio, even if you're starting with just a few $100. Let's face it, many people dream of being a millionaire, but the reality is that it often feels out of reach. But here's the truth. With the right strategies, anyone can start building wealth. So, how do we do it? First off, let's talk about setting clear financial goals. Think of your goals as the GPS for your investment journey. Do you want to save for retirement, a home, or your kids' college education? Setting specific, measurable goals gives you direction and helps you choose the right investments. For example, if you're 30 and want to retire at 65, you have 35 years to let your money grow. Next, let's consider risk tolerance. This is all about understanding how much risk you're comfortable taking. Are you more of a thrill seeker, ready to invest in volatile stocks for potentially higher returns? Or do you prefer the stability of bonds, even if the growth is slower? Knowing your risk tolerance helps you select the right mix of assets. Picture this. Stocks are like a roller coaster, exciting but unpredictable, while bonds are more like a calm train ride, steady and reliable. Now, let's move on to diversification. This is the practice of spreading your investments across different asset classes to minimize risk. Imagine you have a fruit basket. If you fill it with only apples and a disease strikes, you'll lose everything. But if you have apples, bananas, and oranges, you're covered. In investing, you can mix stocks, bonds, ETFs, and even real estate. Speaking of which, let's talk about ETFs. Exchange-traded funds are a fantastic option for beginners. They allow you to invest in a collection of stocks or bonds without having to pick individual ones. It's like buying a whole fruit basket instead of just one type of fruit. ETFs also tend to have lower fees than mutual funds, which means more money stays in your pocket. Now, let's highlight the power of compound interest. Imagine you invest $1,000 at an annual return of 7%. In just 10 years, that could grow to about $1,967. But if you keep that investment going for 30 years, you'd be looking at over $7,600. The key here is to start early and be consistent. It's not about timing the market, it's about time in the market. Another critical point is monthly contributions. Even if you can only add $100 a month, that consistency builds momentum. Think of it like watering a plant. A little water every day leads to growth over time. Plus, when you make regular contributions, you're buying in at various market prices, which can help average out your costs. Let's not forget about education. The more you learn, the better your investment decisions will be. Read books, watch videos, and follow financial news. The world of investing is always changing, and staying informed can help you make savvy choices. As we wrap up, remember that patience is key. Building a $1 million portfolio won't happen overnight. It takes time, effort, and sometimes a bit of trial and error. Don't get discouraged if things don't go as planned. Stay the course and keep learning. So, here are your key takeaways. Set clear financial goals. Understand your risk tolerance, diversify your investments, leverage ETFs, harness the power of compound interest, make regular contributions, keep educating yourself, and most importantly, be patient. Are you ready to start building your $1 million portfolio? Drop a comment below, sharing your investment goals, and let's discuss. And don't forget to subscribe for more financial wisdom. Next time, we're diving into an asset class you might not be paying attention to. Don't miss it.